Welcome to The Explainer. Today, we are diving into a topic that, let's face it, affects pretty much all of us: medical bills. But instead of just focusing on the cost, we're going to flip the script and show you how to turn those expenses into some serious tax savings. So, if you've ever paid for a prescription, for dental work, or for any kind of specialized care, then you need to listen up. A lot of us, and I mean a lot, are leaving money on the table with the CRA just because we don't realize what we can actually claim on our taxes. Well, the key to unlocking all of this is something called the Medical Expense Tax Credit, or METC for short. Honestly, it is such a powerful tool, and it's designed specifically to help ease that financial pinch from healthcare. Today, we're going to break down exactly how you can make it work for you. Here's the game plan. We'll start with the absolute core rules you have to know. Then we'll get into the really high-value stuff, like attendant care. After that, we are going to explore the huge and, frankly, surprising list of what's eligible. We'll even cover the rules for travel. And to wrap it all up, we'll finish with some pro tips to help you avoid those common, easy-to-make mistakes. Okay, let's dive right in. First up, the fundamentals. Getting these core rules down is the foundation for everything else, so this part is absolutely crucial. So what is this thing, really? The MATC is a non-refundable tax credit. Now, I know that sounds super technical, but it's actually pretty simple. It doesn't mean you get a check in the mail. Instead, it directly chops down the amount of income tax you owe. So if you owe $1,000 in tax and you have a $1,000 credit, poof, your tax bill is zero. It's just as good as cash. All right, here's how the math works, step by step. First, you gather up all your eligible expenses from any 12-month period that ends in the tax year. That's a key detail. Next, you figure out your threshold. This is going to be the smaller of two numbers, either 3% of your net income or that set amount, which is $27.59 for 2024. Then you just subtract that threshold from your total expenses, and whatever's left over, that's the amount you get to claim. And here's the big takeaway. A lower income means a lower threshold, which means a bigger claim. And this example right here just illustrates that point perfectly. Look at Richard and Pauline. They have the exact same medical bills, $6,300, but because Richard has the lower net income, his 3% threshold is way smaller. That lets him claim over $5,000, while Pauline could only claim around $4,650. So the strategy here is crystal clear. In a family, it almost always makes sense for the lower income spouse to claim all the medical expenses. You'll get a way bigger credit. Okay, let's move on. This next section can be a bit complex, I'll admit, but it covers some of the biggest claims you can possibly make. Care for your loved ones. We're talking about things like attendant care and costs for nursing homes. Now, here's where it gets really interesting. When you get a bill from a facility like a retirement home, you can't just claim the whole thing. Rent, for example, is out. But, and this is a big but, you can claim the part of the fees that pays for the salaries of the care staff. Look at this: nursing wages, the activities director, housekeeping, even the dietitian and chef wages, they all count. In this one example, that adds up to almost $13,000 in eligible expenses. Okay, this is where you have to do a little bit of planning, because it gets tricky. For some types of care, you actually have to make a choice. If you claim the full cost of a nursing home, for instance, you can't also claim the disability amount for that person. But if you only claim the salary portion of those fees, you can claim the disability amount on top of medical expenses up to a $10,000 limit. You literally have to run the numbers to see which option saves you more on your taxes. And this is why doing the math is so important. Let's look at Judy's choice. Her total attendant care costs were $24,000. In option 1, she claims the $10,000 medical expense max and the disability amount. Her tax bill? Over $1,300. But in option 2, she gives up the disability amount so she can claim the full $24,000 in expenses. And look at that result. Her tax bill drops to under $700. That's a savings of over $600, just from picking the right option for her specific situation. All right, let's get into the nitty-gritty. You might actually be shocked by what the Canada Revenue Agency considers a valid medical expense. The list is long, and it covers a whole lot more than just a quick trip to the doctor. Seriously, the scope here is just huge. We're talking about major procedures like cancer treatment, even if you get it outside of Canada, and fertility treatments like IVF. But it also includes things you might not expect, like laser eye surgery, special therapy plans, and even the cost of a service animal. Yes, that includes their food and vet bills. And of course, all that expensive but necessary dental work, as long as it's not purely cosmetic. And here's an area that gets overlooked all the time, making your home or car more accessible. If you need to put in ramps, make doorways wider, or lower your kitchen cabinets for someone with a severe mobility issue, you can claim those costs. It even covers things like a special furnace for someone with a chronic respiratory problem, or one of those power chairs for a staircase. It is important to know the specific limits, though. For example, if you're adapting a van to be wheelchair accessible, you can claim 20% of that cost, but your claim is capped at a maximum of $5,000. That's still a huge credit, but it's good to know that ceiling is there when you're planning a big purchase. Okay, now for a very specific but really important one, gluten-free food for people who have celiac disease. The process is pretty straightforward. You need a letter from your doctor, you have to keep every single receipt, and then you have to calculate what's called the incremental cost. You can't claim the full price of the food, just the extra amount you had to pay because of your medical condition. This little chart makes it super clear. If a loaf of gluten-free bread costs $8 and regular bread is $4, the incremental cost is $4. That's the difference you get to claim. Over a whole year, if you buy just one loaf a week, that's an extra $208 you can add to your medical expenses. It really does add up. So what about the cost of just getting to your appointments? I mean, medical care isn't always around the corner, and thankfully the CRA has some specific rules that let you claim travel expenses. You just need to remember two magic numbers here, 40 and 80 kilometers. If you have to travel at least 40 kilometers one way for care, you can claim your transportation costs, things like a bus ticket or even your vehicle expenses if there's no public transit. But once you cross that 80-kilometer threshold, well, that unlocks even more claims. Then you can add accommodation, meals, and parking on top of your transport costs. These little scenarios make the rules really easy to understand. So Maria needed an attendant, right? She could claim travel costs for both herself and her son. Jennifer's husband could claim the drive to drop her off and pick her up from the hospital, but he couldn't claim the cost of a social visit in the middle of her stay. And John, who had to fly all the way to Germany for care, could claim his flights and his living expenses for the time he was actually getting treatment. And finally, let's talk about what you can't claim to save you from making those common mistakes, and what you absolutely have to keep on file in case the CRA decides to ask a few questions. Okay, this is just as important as knowing what you can claim. Things like over-the-counter pain relievers or vitamins, they're generally a no-go even with a prescription. There's a weird exception for vitamin B12, but that's about it. Gym memberships, purely cosmetic stuff like teeth whitening, and your provincial health premiums are also out. Knowing this list can save you a huge headache down the road. And my last and probably most important piece of advice is this. Documentation is absolutely everything. You need detailed receipts, you need copies of prescriptions and proof you actually paid, like a credit card statement. For attendant care, you need the caregiver's SIN on that receipt. For a nursing home, you need that detailed salary breakdown we talked about. The rule is just so simple. If you can't prove it, you can't claim it. Being organized is your best strategy. So, that brings us to the big question for you. After seeing all of these possibilities, from travel and therapy to home renovations and gluten-free food, what's the one overlooked expense that you are now going to be adding to your tax return this year?